You ever wonder how someone with a credit score of 780 can get a mortgage with a rate that's 1.5% lower than someone with 680? It's not magic, it's math. In 2026, credit scores are more than just numbers. They're the foundation of your financial freedom. Whether you're buying a home, starting a business, or planning for retirement, your credit score is the key. But here's the thing. Most people don't even know where to start. That's why I'm here to break down the 2026 Guide to Credit Mastery. By the end of this video, you'll have a roadmap to boost your score, unlock better rates, and take control of your financial future. Let's dive in. First, let's talk about checking your credit report. In 2026, it's easier than ever to monitor your credit. You're entitled to one free report from each of the three major bureaus, Experian, Equifax, and TransUnion, every 12 months. But here's the twist. In 2026, you can get a free weekly report through services like Credit Karma or Experian's Credit Score Watch. Why does this matter? Because in 2026, identity theft and credit fraud are more common than ever. A recent study by the Federal Trade Commission found that 1 in 5 people in the U.S. had their credit report compromised in 2025. That's why you need to check your report regularly. Let me give you a real example. Last year, a 32-year-old teacher named Maria noticed a $500 charge on her credit card she didn't recognize. She called the credit bureau, disputed the charge, and within 30 days, the fraudulent transaction was removed. Her score jumped 120 points overnight. That's the power of vigilance. Now let's talk about paying on time. Your payment history makes up 35% of your credit score, so it's the biggest factor. But here's the catch. In 2026, late payments are tracked more precisely. Creditors now use AI to monitor your payments down to the minute. For example, if you pay your credit card bill on the 15th of the month, but your due date is the 10th, that's considered late. In 2026, even a 10-day delay can ding your score. Let me share a story. James, a 28-year-old software developer, missed a payment on his credit card in January 2025. He panicked, but he made the payment the next month. Within 6 months, his score recovered, but it took him 18 months to get back to his pre-late payment score. That's because the impact of a late payment lingers. So, here's your action step. Set up automatic payments or use calendar reminders. If you're late, pay the minimum first, then the full amount. And if you're struggling, reach out to your creditor. They might offer a payment plan. Next up, credit utilization. This is the ratio of your balance to your credit limit. In 2026, the ideal utilization rate is below 10%, but even 30% is considered good. Let's say you have a credit card with a $5,000 limit. If you spend $1,500, your utilization is 30%. That's okay, but if you hit $2,000, you're at 40%, which can lower your score. A study by the Consumer Financial Protection Bureau found that people with utilization below 10% are 2.5 times more likely to qualify for a mortgage with a lower interest rate. Here's a real case study. Sarah, a 30-year-old nurse, had a utilization rate of 45% for years. She decided to pay off her credit card balance in full each month. Within 6 months, her utilization dropped to 5%, and her score increased by 50 points. That's the power of discipline. So, your action step: pay off your balances in full, and if you can't, keep your balance under 10% of your limit. Now, let's talk about opening new credit accounts. In 2026, having a mix of credit types, like credit cards, loans, and installment accounts, can boost your score. But here's the trick. Opening too many new accounts in a short time can hurt you. Each new account adds a hard inquiry to your report, and in 2026, hard inquiries can lower your score by 5 to 10 points each. However, if you're building credit from scratch, a secured credit card can be a game changer. Let me explain. Take Mark, a 22-year-old college student. He had no credit history. He applied for a secured credit card, which required a $500 cash deposit as collateral. He used the card responsibly, keeping his balance below 30% of the limit. Within a year, his score jumped from 450 to 620. That's because secured cards are designed to help people build credit. So, your action step: if you're starting fresh, get a secured card. If you already have credit, consider adding a new type of account, like a personal loan, to diversify your credit mix. Disputing errors is another key strategy. In 2026, the Fair Credit Reporting Act, FCRA, has been updated to give consumers more power. If you find an error on your report, you can dispute it online, by phone, or in writing. The Bureau has 30 days to investigate and respond. Here's a real example. Carlos, a 35-year-old marketing manager, noticed a $2,000 charge on his credit card he didn't recognize. He disputed it, and the creditor had to prove it was legitimate. After 30 days, the charge was removed, and his score increased by 150 points. That's because errors can drag down your score by 100 points or more. So, your action step: review your report every 3 months, and if you find an error, dispute it immediately. If the creditor can't prove the charge, they have to remove it. Building a long credit history is another factor. In 2026, the length of your credit history accounts for 15% of your score. If you've had credit accounts for 10 years, that's better than someone with accounts for 5 years. But here's the catch: if you close old accounts, it can shorten your history. Let me give you an example. Emily, a 40-year-old teacher, had a credit card she'd used for 15 years. She closed it to avoid fees, but her score dropped 50 points because her history was now shorter. That's why it's better to keep old accounts open. So, your action step: don't close old accounts unless you're paying fees. If you do close one, make sure you have other accounts with long histories to compensate. Now, let's talk about using technology to monitor your credit. In 2026, AI-driven tools like Credit Karma, Experian Score Watch, and even your bank's app can track your score in real time. These tools can alert you to changes, like a sudden drop in your score. For example, if your score drops 50 points overnight, it could mean a fraudulent transaction or an error. Let's say you're using an app that notices a drop and sends you a notification. You can check your report, find the issue, and take action before it affects your credit. In 2026, these tools are more advanced than ever, with machine learning predicting potential issues. So, your action step: sign up for a free credit monitoring service. It's like having a personal credit coach. Financial freedom through credit is the ultimate goal. A high credit score can unlock better rates on mortgages, car loans, and even insurance. For example, in 2026, the average 30-year mortgage rate for someone with a 760 credit score is 4.5%, while someone with a 620 score might face 6.5%. That's a $12,000 difference over the life of the loan. Let's take a case study. David, a 38-year-old small business owner, had a 680 score. He decided to boost his score by paying off his credit card, keeping utilization below 10%, and disputing a late payment. Within a year, his score hit 760. He refinanced his mortgage and saved $15,000 in interest. That's the power of credit mastery. So, your action step: set a financial goal, like buying a house or starting a business, and work backward to improve your credit. Finally, let's wrap this up with actionable steps. Here's what you can do today. 1. Check your credit report every 3 months. 2. Pay bills on time and set up automatic payments. 3. Keep credit utilization below 10%. 4. Add a new type of credit account if you're building history. 5. Dispute any errors immediately. 6. Use a credit monitoring tool. 7. Build long-term credit history by keeping old accounts open. 8. Link your credit goals to your financial plans. By following these steps, you're not just improving your score, you're unlocking financial freedom. So what's your next move? If you want to take control of your credit and your future, start today. Check your report, pay on time, and build a plan. You don't have to do it alone. I'm here to help. If you like this video, hit subscribe and turn on notifications. Share this with someone who needs to know about credit mastery. And remember, your credit score isn't just a number. It's the key to your financial freedom. Let's make it work for you.